It's 2019 and WeWork is the hottest startup on the planet, valued at a staggering $47 billion, more than Airbnb or SpaceX. Its founder, Adam Neumann, promises to revolutionize how we work, live, and even think. But in just 6 weeks, it all comes crashing down. How did $47 billion vanish? Let's uncover the truth. WeWork wasn't just renting office desks. It was sold as a tech revolution, a community that would elevate the world's consciousness. Backed by billions from SoftBank, it grew at breakneck speed, opening trendy offices from New York to Tokyo. But behind the free beer and ping-pong tables was a house of cards. Today, we'll dive into WeWork's meteoric rise, its catastrophic fall, and the lessons it leaves behind. Stick around, this gets wild. Let's start at the beginning. In 2010, Adam Neumann, a 6'5" entrepreneur raised on an Israeli kibbutz, teamed up with architect Miguel McKelvey in New York City. Fresh off a failed co-working venture called Green Desk, they saw a gap in the market. Freelancers and startups needed flexible, inspiring workspaces, not stuffy corporate offices. So they launched WeWork, offering shared desks, glass-walled meeting rooms, and a vibe that screamed cool. Neumann wasn't just selling office space, he was selling a lifestyle. WeWork's slogan, "Do what you love," resonated with millennials. Their offices had kombucha on tap, neon signs, and summer camp-style parties. Neumann pitched it as a community, not a company, and investors ate it up. By 2014, WeWork was valued at $5 billion, with 16 locations across the US and Europe. The real rocket fuel came in 2017. Enter Masayoshi Son, the billionaire CEO of SoftBank, whose vision fund was splashing cash on startups like Uber and Slack. Son saw Neumann as a visionary. After a 12-minute tour of a WeWork office, he reportedly scribbled a $4.4 billion investment deal on his iPad. SoftBank would eventually pour $10.5 billion into WeWork, pushing its valuation to a jaw-dropping $47 billion by January 2019. That's more than Ford or Delta Airlines. Neumann's ambition grew with the money. WeWork wasn't just offices anymore, it was a We universe. He launched We Live, co-living apartments, We Grow, a private school, and even talked about WeBank and WeSale. Neumann told investors WeWork was a tech company, like Google or Amazon, with proprietary software and data. But here's the catch. WeWork was, at its core, a real estate business, leasing office buildings and subletting desks. How could desks be worth $47 billion? The cracks started showing in August 2019, when WeWork filed its S-1 prospectus to go public. This 300-page document was supposed to convince Wall Street to buy its stock. Instead, it set off alarm bells. According to the S-1, WeWork lost $1.9 billion in 2018 while earning just $1.8 billion in revenue. That's right, they were burning through cash faster than they could make it. Worse, they had $47 billion in lease obligations, long-term contracts for office spaces they might not fill. Then there was Adam Neumann himself. The S-1 revealed bizarre governance issues. Neumann had sold the trademark for We to WeWork for $5.9 million, essentially charging his own company for its brand. He'd borrowed $500 million against his WeWork stock to fund a lavish lifestyle, private jets, a $60 million Gulfstream, and 5 mansions. He even pitched WeWork as a solution to world hunger, which raised eyebrows. The Financial Times called it magical thinking. Investors and analysts started asking tough questions. Was WeWork a tech company, as Neumann claimed, or just a real estate firm with a fancy logo? The company's business model relied on lease arbitrage, leasing offices long-term and renting them short-term. If tenants left or a recession hit, WeWork could be stuck with empty buildings. And with losses of $5.5 million a day, the math wasn't adding up. The media pounced. Articles in the Wall Street Journal and Bloomberg painted Neumann as erratic, throwing tequila-fueled parties, hiring friends, and once performing with Run DMC at a company event. Employees loved the free beer but whispered about a cult-like culture. One former staffer told a billion-dollar loser author, Reeves Weideman, it felt like we were drinking the Kool-Aid. Public sentiment on platforms like X echoed this. Users called Neumann a con artist who sold desks as Silicon Valley gold. The house of cards collapsed in September 2019. WeWork's IPO was supposed to raise $3 billion to keep the party going. But after the S1 disaster, investors balked. The valuation plummeted from $47 billion to $10 billion in weeks. Facing pressure from SoftBank and the board, Neumann resigned as CEO, walking away with a $1.7 billion golden parachute, $970 million for his stock, $185 million in consulting fees, and a $500 million credit line. Employees, meanwhile, faced layoffs. WeWork tried to recover. New leadership slashed costs, closed unprofitable locations, and delayed the IPO. But the timing couldn't have been worse. In 2020, the COVID-19 pandemic emptied offices as remote work became the norm. By 2021, WeWork went public via SPAC, a backdoor IPO at a modest $9 billion valuation. But the damage was done. Losses mounted and lease obligations loomed. Fast forward to November 2023, WeWork filed for Chapter 11 bankruptcy in New Jersey, listing $18.6 billion in debts against $15.1 billion in assets. Its stock, once hyped as a unicorn, had fallen 99.8% from its peak. Forbes reported the valuation at a mere $44.5 million, a fraction of its $47 billion high. SoftBank wrote off nearly all its $10.5 billion investment. WeWork's 150,000 global tenants and 4,300 employees faced an uncertain future. So, what killed WeWork? Was it Adam Neumann's reckless ambition, selling a real estate company as a tech giant? SoftBank's blind faith, pouring billions into a losing bet? Or the pandemic, which turned offices into ghost towns? Maybe it was all of the above. WeWork's collapse is a warning. Charismatic leaders and easy money can create billion-dollar dreams, but reality always catches up. What do you think caused WeWork's fall? Was Neumann a visionary or a conman? Drop your thoughts in the comments. We read everyone. If you enjoyed this deep dive, hit that like button and subscribe for more stories of ambition, triumph, and collapse.